Good morning, everybody. Happy Friday, everybody. Today is June 23rd, 2023, and stocks are getting clobbered at the opening bell this morning. I don't know, do we have a flight to safety going on? We've got bond yields are a little bit lower, but gold and silver aren't really doing so hot. They're up a little bit this morning, not by much. I think what we're seeing is end of quarter rebalancing by some of the big fund managers after the rip and rally that stocks have had in this quarter. We've got the end of the quarter coming up next week, and a lot of these big fund managers are required to maintain a certain weighting of bonds and a certain weighting of stocks. And while stocks have run like the blazes, and so at the end of the quarter, they got to trim some of those stocks and send that money back over to bonds. I suspect we're seeing some of that this morning. Then again, there's no shortage of reasons why stocks should be heading lower. I've been talking about them ad nauseum on this channel. Maybe the market has suddenly come to its senses. After all, we did get those 2 Tesla downgrades over the last few days. But I suspect this is just your good old-fashioned run-of-the-mill portfolio rebalancing. Elsewhere, Siemens Energy has a big problem, and I mean a big problem. The number 2 maker of wind turbines in the world has announced that they've got a series, they didn't get into specifics, but a series of component defects that affects, they're saying, somewhere between 15 and 30% of their windmills. And folks, we're talking about a company that has something like 8.5 gigawatts of installed wind turbine capacity across the world, the second biggest manufacturer of windmills. And they're saying up to 30% of their windmills have a big problem. This is not a little quality control issue, folks. When 1% of the things coming off your assembly line has defects, you've got a quality control problem. When 30% of your things coming off of your assembly line have quality control issues, you suck at what you do. Sorry for the harsh language here, but let's be honest, this entire industry was built around chasing government subsidies. Be damned if these things actually make any power or actually support the grid. It's just all about feel-good things being said at meetings or in press conferences, money from tax dollars being shoveled into these companies, and they just don't care if they put out a halfway decent product. And now Siemens is saying, oh boy, all these windmills that we've scrambled to build, the energy transition and unicorns and rainbows, oh, sorry, they don't work, are bad. Siemens stock was down 30% at one point this morning. We've also got the dollar shortage in Argentina persists. Argentina is turning to more yuan. And we've got all kinds of stuff going on this morning. But first, I have to say thank you so much to Patriot Gold, the sponsor of this live stream. Folks, we are watching stocks sell off right now. Stocks are at all-time high valuations. We know the market is in a bubble. Everything is in a bubble right now. It's going to pop. It's not a matter of if, it's a matter of when. And when that happens, you better be protected. And the best way to protect yourself from financial mayhem is through the ownership of physical precious metals. That's why I like Patriot Gold Group. They are a Consumer Affairs top-rated gold-backed IRA dealer for several years in a row. So call 888-988-5401 or go to nsfgold.com. You'll find that link down in the description below. And of course, tell them that nobody sent you. And with that, we are going to shrink my big melon of a head. And let's see what's going on in the markets this morning. The S&P has opened down 35 points or 0.82% at 43.46. We've got the Dow. Whoa, big red candle down on the Dow this morning. Check that one out. Down 263 points or 0.78%, trading at 33,683. And the NASDAQ leading the way lower, down 130 points. Gave up all its gains from yesterday, down 0.94% at 13,502. Big step down for tech this morning. Looking at the U.S. dollar, it's currently up 39 basis points. It was up more in the middle of the night. It's given back some of that right now, currently at 102.77. And in bonds, we've got yields are lower virtually across the board. Check out the 10-year yield. It is down 6 basis points right now, or 1.5%, yielding 3.7. Looks like the big mover today is the 3-year, is down 11 basis points. Again, bond yields going lower. That's bond prices going higher. So people are selling stocks and buying bonds this morning. Now, normally you would call that a flight to safety or a fear trade. People are getting out of risky assets and going for safety. but I'm not really seeing the flight to safety. Well, we're starting to get it now a little bit. Gold is up 1%. It's up $20. But you have to put that in the context of what gold has done over these last few days. I mean, gold and silver in particular have been just bludgeoned these last few days. We are seeing a little bit of a run to gold right now, up $20. But I'd expect to see a bigger move in gold if this was really a panic trade, if this was really the fear trade. That's why I think what we're seeing right now is more portfolio rebalancing. I could be wrong about that. We'll see what develops across the day. But silver right now only up 2 cents or 0.07% at 22.48. And silver has been beaten down well over $1 over these last few days. So I would expect if this was an all-out panic or the fear trade, I would think we'd see silver rallying a little bit more than we're seeing right now, certainly gold. Elsewhere, we've got crude oil is down big again today. We got a 67 handle on WTI crude, 67.69, down $1.82 or 2.62%. And we've got natural gas down 3% or about 8 cents right now at 2.53. All right, let's look at some of these high-flying tech stocks because we got ourselves a good old-fashioned tech correction going on right now. We've got NVIDIA stock is down $3.70 or 0.83%. Let's see what Tesla's doing. Tesla's down 1.4%. Microsoft is down 1.1%. Apple is down 1%. Alphabet is down 1.1%. So we've got all the stocks that have driven this rally, right? The S&P 7, if you will, the S&P 5, or whatever, the few big mega cap techs that have really driven this rally, they're all being sold off right now. It's another reason why I think what we're seeing here is portfolio rebalancing because they're selling what did really well in the quarter, and the quarter ends next week. Nobody wants to make that trade all at once so they can be front run, so it looks like they're starting this a little bit early. And here is the big story. Again, just throwing government money at the problem is never how you solve a problem. It always results in bad malinvestment. It results in fraud or stories like this. Siemens Energy shares plunge more than 30% as wind turbine worries deepen. The company announced late yesterday that a review of issues at subsidiary Siemens Gamesa, is that how you say that, had found a substantial increase in failure rates of wind turbine components. The Siemens board had initiated an extended technical review that will incur significantly higher costs than previously assumed, estimated to be in excess of 1 billion euros. Whoops, that's an expensive mess up. Siemens Energy shares plunged by 34% by Friday afternoon after the company scrapped its profit forecast and warned that costly problems at its wind turbine unit could last for years. And there was something really, where was that quote here? Here, Siemens Energy CEO Christian Bruch told journalists on a call Friday that too much had been swept under the carpet. When a CEO is talking about his own company, saying too much has been swept under the carpet, that's a big problem, guys. At Siemens Gamesa, and that quality issues were more severe than he thought possible. They're not more severe than he previously thought. He's saying these quality issues were more severe than he thought possible. These things are crap. And how bad are they? Well, here we go. Siemens Energy estimates that component failures may be occurring between 15 and 30% of its installed fleet of turbines. But Green noted that there's still a slight question mark about where that liability ends. They don't know how much it's going to cost them. They don't know. They don't even know the scope of the problem. Between 15 and 30% of the installed fleet, the second largest windmill fleet in the world, that's a huge band, if you will, where your problem lies. We don't know how many component failures within those 15 to 30% of turbines, and we don't know how much it's going to cost to replace those components or to fix them if they're even going to try. This is a huge problem. And again, you just keep shoveling billions, throw billions of dollars, the energy transition, the Green New Deal, unicorns and rainbows. Oh, we're all going to live in a commune and it's going to be great and there's going to be no more pollution. How about we pay a little bit of attention to whether or not this stuff works? You know what? I just throw them out there. You guys do what you want with them. Period. End of story. Moving on. Dollars are so scarce in Argentina that the yuan use is at a record. All right, this is another story. I did a video about this about a week ago, and I know you guys are big on the de-dollarizing story. All right, and I have not been so big on the de-dollarizing story, at least the details of the de-dollarizing story. Yes, the world is slowly de-dollarizing. It's happening. The US dollar has lost some of its reserve status over the last 20 years. It's happening much slower, I think, than a lot of people are saying. But it's the why the de-dollarizing is happening. And you've got to look into the details to really get the gist of this story. It's gotten so hard to find US dollars in Argentina that Whirlpool, the American appliance giant, is considering paying with China's yuan to import parts for a new factory. It's not alone. Read that first line again. It's gotten so hard to find US dollars in Argentina. So do you see where I'm going with this? Yes, Argentina is de-dollarizing, but they're not dumping their dollars. They're out of dollars. So there are no dollars that are going to come running home because they're useless now. Argentina is de-dollarizing because they can't get enough of them. So this is not a problem. At least this part of the story is not going to result of this in this flood of US dollars coming back home to chase goods and services domestically, leading to hyperinflation in the States. This is a problem of a dollar shortage. In other words, the dollar is getting stronger, not weaker. So you have to read the nuance and you have to really think about what's going on the ground here. Read past some of the headlines and some of the, I don't want to say FUD, but some of the more alarmist, clickbaity stuff that's going on out there. What you actually have is a dollar shortage in Argentina. And I also want to get into this part. China recently allowed Argentina to use more than half of a $18 billion currency swap line to support trade between them. The two nations have shared a bilateral swap agreement since 2009, which was conceived as a sort of an insurance policy to strengthen foreign reserves during a liquidity crisis. So Argentina typically pays for this stuff in dollars for their imports. They're out of dollars because their economy is slowing. They've had a severe drought in Argentina. Normally, Argentina gets dollars by selling food, and people buy that food with dollars. That's how they get the dollars they need to import other things. Well, their food sales are down because of this drought, so they've got fewer dollars. They need to hold on to the dollars they have. So what they're doing is they're taking their Argentinian peso, which is just crap. They've done basically everything that I talked about in the lira in my video yesterday in Turkey. They've done in Argentina, but even worse. So Argentina is printing pesos. They're going into a swap line agreement with China to get yuan. So China is lending yuan to Argentina with pesos as collateral, worthless pesos. And then Argentina is taking those yuan and giving them right back to China to buy the parts that they need to make these Whirlpool appliances. So does this sound like a very good deal for China to you? Not really. China is making this investment. This is actually a big liability for China. China is doing this because they want more yuan usage, because China desperately wants the ability to export inflation that the United States has had for the last 50 years, because that ability to export inflation is why the United States military has been able to balloon to such an obscene size, and China wants to eventually challenge the U.S. military, so they need that ability to finance it. So this right now is an expense for China. This is not China really gaining ground. It's more of an investment on their part. Now, in the long run, this may work out to their advantage, but at least for the time being, this is not the world running away from the dollar. The world is more desperate for dollars now than they have ever been. Another one we got going on today. Ford prepares a new round of layoffs for U.S. salaried workers. Well, guys, we were just talking about Ford yesterday, weren't we? That they got this $9.2 billion loan from the government, part of the Inflation Reduction Act and the CHIPS Act and all this other stuff. Oh, they're going to, they're ramping up. Then a day later, they're laying people off. What's going on here? Automaker looks to cut costs as it spends heavily on shift to EVs. Ford Motor is preparing to initiate another round of layoffs in the coming weeks. According to people familiar with the matter, there's that anonymous source again. The latest in a broader effort by the automaker to streamline operations and reduce costs. The layoffs expect to mostly include U.S. salaried workers, would be one of the several that Ford has initiated in less than a year and could be announced as early as next week, some of the people said. The number of people Ford plans to lay off in this latest round couldn't be learned. The cuts are expected to affect employees in Ford's gas engine side of the business, as well as its electric vehicle and software division, the people said. So they're getting a $9.2 billion loan from the government to build out their EV fleet, and they're laying off people in their EV fleet. Okay. Again, it's mostly white-collar workers getting laid off. But this is somewhat contradictory, isn't it? And also the fact that they're laying off people in the gas engine side of the business. Understand, Ford loses money on electric vehicles right now, guys. I mean, the F-150 is essentially subsidizing Ford's development of electric vehicles along with the government loans. Right? Have you looked at the price tag of a baseline F-150 now? What is it, $1 million for a pickup truck now? I mean, the F-150 used to be like your common man's truck back in the day. Now you almost need a second mortgage to afford an F-150. Well, the higher cost of the F-150 is what is bankrolling all of this R&D into EVs, so again, along with the government subsidies. And now they're laying off people in their gas engine fleet. So things are a little messy over at Ford right now. And the last one I want to talk about today, Euro area manufacturing PMI. Check this one out. Just hit today. The Eurozone manufacturing PMI fell by 1.2 points to 43.6 in June, missing market expectations of 44.8. And just look at manufacturing PMI. This is the Purchasing Managers Index. Anything below 50 represents contraction. Here's your 50 line right here in the middle of the page. This manufacturing in the Euro area has been in decline for almost the entirety of the last year. And I just want to zoom out on this chart, guys, so you can kind of see how bad it's getting. I mean, look, since since late 2021, this thing has just been falling. Manufacturing continues to shrink in Europe. And now it's not quite as low as we got at the height of the pandemic, but that was kind of a one-off. If you zoom out to a 25-year chart, guys, we're, almost down towards the depths we were at during the global financial crisis. So this is the energy situation, the inflation situation in Europe, eating away at the ability of Europe to produce manufactured goods, notably in Germany. Europe dodged a bullet over the winter. It never got as cold as it normally does this winter, so that's really the only reason any European manufacturing survived. They haven't really done anything. They've just built more windmills, and we just established that those windmills, at least 30% of them, don't work. And so I don't see a light at the end of the tunnel for European manufacturing. And I also have to mention the PMI shrinking like this. This is manufacturing and contraction. This is less goods being produced in Europe. So I've been talking a lot about the deflation story. I still think deflation is coming, but keep in mind, fewer goods being produced in European factories. That is an inflationary force. So this story is somewhat contrary to the narrative I've been giving you guys about deflation lately. But let it not be said that I have confirmation bias. I will give you both sides of the story, both sides of the trade every time. You guys make up your own mind and let me know what you think. All right, guys, I just want to say thank you very much, everybody, for your time, for watching today. Thank you to Patriot Gold for sponsoring, and thank you to my Patreon supporters for everything you guys do for the channel. There's a link down below should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Till next time, live small and dream big.